Hey, what's going on, guys? It's Sam Kwak here, one of the Kwak Brothers, real estate investor. And today we're going to talk about what in the world is a cap rate, right? So you probably hear cap rate that, cap rate this, 10% cap rate, 8% cap rate. So you might be wondering what it is and how do we determine, how do we calculate this? Why do we use this? So we're going to talk about this. So guys, cap rate is typically used in a multifamily commercial residential world. I rarely see it being used on single family. In fact, it really doesn't quite work in single family from my own experience. Just to give you an idea, guys, my brother and I currently have 75 units of rentals, and we're, of course, acquiring more properties. But we've been using cap rates to acquire multifamily apartment buildings, and cap rates are quite important when it comes to pricing and valuing a multifamily property. Now, you may see a lot of people throughout the term cap rate. Cap is actually shortened for capitalization rate, right? So I'm gonna write that down here for you guys. I might have a bad marker, so I'm gonna use a different marker here. And I know my YouTubers like to complain that I have terrible markers, okay? So there we go, capitalization rate. Now, a cap rate is calculated simply with this equation, okay? It simply is NOI divided by purchase price. So NOI, you guys know, is net operating income. That is rent minus all the expenses, okay? And that's how the net operating income is determined. If you guys have seen my how to determine cash flow video, I talk about that on how to calculate the NOI. So what you're doing is you're dividing net operating income divided by purchase price, and that will typically give you the cap rate in a percentage, okay? Now, cap rate can be used also in backwards mode, right? To determine what the purchase price is gonna be if you know the net operating income. So this is obviously simple math. So if you know that in a given market area, that in your area, typically most multi-properties are priced at, let's say, 8% cap rate. Well, if you know that your market goes for 8% cap rate, which I'll briefly explain to you why it does that, and if you know your net operating income, well, then you will also know what the purchase price is going to be, right? Which is a really good way to determine the value of the multifamily apartment. Now, what's nice about, what I really love and what's really nice about multifamily apartment is what the net operating income does also affects the purchase price, right? So the more net operating income this particular property brings, the purchase price goes up. Now, if I'm the owner, let's say, in a given multifamily property, and during my ownership and tenure, if I can raise the net operating income by cutting back expenses or by raising the rents, then I, in fact, will increase the purchase price, meaning I get to increase equity, right? I get to build more equity just by raising more net operating income, which is really a good thing, right? We're getting wealthier is basically what that means. Now, I know I mentioned that cap rate is also driven by the market. Instead of just the numeric part, there's also a market component, okay, is market demand. There's so many different factors, conditions, okay, the neighborhood, okay, and all of the underlying factors to what I've mentioned there represents possible risk, right? So if you're in a really shady neighborhood, okay, I'm not going to mention any names, but if you're in a shady neighborhood where there's a lot of crime activity, a lot of drug, not so much of a good things happening in that neighborhood, well, chances are you may not want to pay a really high price. So therefore, in a riskier areas, like I mentioned, your cap rates tend to go up, right? Now, there's an inverse relationship here. As the cap rates go up, your purchase price actually goes down, right? Knowing that the net operating income is the same, let's say we have a $10,000 net operating income, okay? If your cap rate goes up, well, we know that the purchase price goes down. If the purchase price goes up with the same net operating income, your cap rate goes down. Now, the cap rate is also determined by the market, the demand, the condition in which the property is in, the neighborhood. So if you're in a really nice neighborhood, I mean, top of the scale, you're demographics, your tenant base, the neighborhood, the location. I mean, it's 5-star, right? Superior than anything that you've seen. Then chances are you're going to have a lower cap rate, right? The lower the cap rate typically represents less risk, right? The higher the cap rate, we're paying less purchase price, and we're dealing with riskier areas or areas that may not be quote unquote top of the line, right? The reason being is that we're looking to get a discount, so to speak, on the risk, right? It's a risk premium. If we need to deal with crime, the drug, the bad area, the bad tenants, then, well, we want a cheaper price. We want to be somewhat compensated to deal with those sort of problems. Therefore, our cap rates go up. If we have a really nice 5-star luxury premium tenants coming in and the condition of the property is like super duper new, then yeah, we're gonna have to pay more for that because there's less risk, right? We're gonna see less problems happening with that property. So you may talk with a commercial real estate agent or a real estate broker, and she or he may say, you know, this area is typically 9% cap rate. Well, then you understand that from the market and the neighborhood and the demand position, you can also determine the purchase price, right? You can kind of get a gauge what the value of the property is. If the real estate agent says, well, this area is 6 to 7% cap rate, well, we know then at that point it's in a really good neighborhood, but also we're going to have to pay a higher purchase price. So on the math side of things, just looking at the financial income approach, you're looking at the net operating income divided by purchase price, which will give you the cap rate, but it's also driven by these other variables, right? The neighborhood, the market, what the demand is, the condition. Those do matter in driving what the cap rate is going to be. Now, my personal preference, I like to buy my properties anywhere between 7.5 to 9% cap rate. That typically is enough, or I should say suffice, to where it beats the stock market, right? If my cap rate, let's say, was 5% versus 9, well, if I can earn 5% return on, let's say, the stock market, why would I want to buy the property on 5% cap rate when I can do something, when I can go to stock market and have less risk than real estate? So by investing in real estate multifamily property, by dealing with tenants and all the different things that come with and investing in multifamily apartments, I would like to see a better return than your traditional stock, bonds, or mutual funds market. Now, guys, I have to give you a disclaimer, right? I am not a financial advisor, so please don't take any of that as a financial advice, nor am I an attorney. So I probably should have mentioned that in the beginning of the video. But anyways, this is typically the basics of cap rate 101. Obviously, there goes way more variables to determine the cap rate. There's a lot of different moving parts that you should be aware. Of course, I don't have all the time in the world to explain it to you guys. But if you guys are interested in learning more on how to acquire apartment buildings, how to work cap rates into it, how to use the different techniques that are underneath this concept, guys, there's a link in the link description below or in the comments below about how you can get access to information and knowledge and additional training on real estate investing and how to get connected to a nationwide group of real estate investors like I did, so that you can also learn how to invest better, right? And how you can also acquire the same type of knowledge and information like I did. And if you guys agree with me, information and knowledge is oftentimes more valuable than money itself, right? Some of you guys might be saying, well, I need all the money in the world. I need more money. I need more capital. Well, guys, if you have the knowledge, if you have the information, if you know how to get deals together, I would bet that you're going to have investors, private lenders, or money partners that want to invest with you because you know what you're doing. You are possessing information and knowledge where you can mitigate risk, where someone who has millions of dollars that don't know what they're doing, well, they have a potential of burning all that money away if they don't know what they're doing. So by you getting educated, by you getting the information and knowledge, you are effectively becoming somewhat like a leadership or a good influence amongst those people that do have the money but not sure how to go about investing in good real estate investments. So get educated, get the information, get the knowledge you need, and luckily I do have a link below this video on where to get the best possible information that I believe that you can get. So check it out. So guys, thank you so much for watching. Thank you so much for tuning in. If you guys are watching this on YouTube, be sure to click like and subscribe to our YouTube channel so that we can provide you with more real estate investing information. Be sure to subscribe, guys. Thank you so much for watching, and I will see you guys in the next video. Take care, guys.